Hello, welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. Wanted to pop in here right away because we got some breaking news going on right now in the economic data front. Actually, we've got a lot going on, a lot of spinning plates, and that's really impacting the market. So let's get through some of what's going on in the world here and then see how the markets are reacting and then find some strategies. All right, so without further ado, we talked about this yesterday. We had a lot of economic data this week. A lot of mixed results really coming out of that. We saw some manufacturing numbers ramping up in one regard and some of them pulling back. Building permits kind of waning a little bit. National Association of Home Builders kind of waning a little bit, but then we see the homes getting sold like gangbusters. So it doesn't seem like anything is following suit. What we're seeing is a lot of folks are getting a little nervous, but they're still pushing forward and kind of a wait and see attitude. As a matter of fact, we got a core retail sales number. Now, remember, core retail sales is going to be stripping out automobiles and things like that. Some more of the volatile aspects. They're also going to be taking out airplanes. Okay, so with that being said, it was supposed to be 2.3%, came in at 2.5%. But when we add back in those automobiles, we actually knocked it out of the park at 3.2%, expected to be 2.4%. So a little bit odd here. As we were talking just earlier this week, we were thinking that automobile dealers are going to be doing pretty bad this year because there's just not enough selection. You know, if you go to buy a car right now, you don't necessarily get the color that you wanted. So I was expecting to see really some of these retail sale numbers come off around the automobile. So a bit of a surprise there. Existing home sales is going to be coming out a little bit later on today. So keep your eyes out for that, as we're going to be watching that NAHB, or the National Association of Home Builders Index, right? While those guys were worried about the 6-month outlook, as interest rates start to increase, then they're going to be worried about the home prices starting to go down. Well, that hurts when home prices start to go down and your cost of those homes is still rising. We still got high lumber prices. Metal prices are still well elevated, and you get all the way down to plastics, and it is astronomical on the plastics side of things there. All right, so let's get on with the markets and see what's going on there. Crude oil still trying to hold on to $100 a barrel. I was hoping to see that break below the 50-day simple moving average, but you know, we've started building a bottom here. It's repelling that, so it's still risk to the upside here. You know, we did get a big, massive drawdown earlier this week. I think it was, not a drawdown, a build of crude oil. I think it was close to a $4 million barrel build over this earlier this week. Come on, Eric, where is it? On Wednesday we get the number. Build 4.3 million barrel build. It was expected to be a drawdown of 1.8 million barrels. So basically a build of 6 million barrels. So that's why we started seeing some of that weakness there through that economic data point just this week. I mean, we've started to turn around at this point as manufacturing was ramping up. I would think that the demand there would start pushing oil as well. Another thing, Ukraine, China, Ukraine supposed to be dropping production of about 3 million barrels a day in the open market. So that's the supply constraints that everybody's talking about. That being said, we aren't producing any more to make up for that. China kind of consolidating with consolidating with Russia on their attack of Ukraine, pushing back on anything Western. As a matter of fact, they're advertising the talking points of Russia. Those are key things that are nuanced in global geopolitical environments that you really need to keep an eye on, because it really is saying China is backing Russia, and the last thing anybody can do is really start getting into a big battle with those two juggernauts, right? One has nuclear arms, all right? So that's something that this administration just wants to stay away from. That said, that could cause a bit of a slowdown here. Prices continue to rise, as we would not be necessarily looking at just-in-time inventory and things like that, where China is going to be always the supplier. We would be looking at other places to get those supplies for different products and not be reliant on one particular group at any given time. So, sorry, I thought I had my TV on here. Bonds are starting to push a little bit higher after we only got a 25 basis point move this week. Well, that's what we were expecting. And they were talking a little bit more dovish than what some folks were thinking. Like we were listening to Bullard at the beginning where he was talking 50 basis points and we were going to be at 2% by the end of the summer. And I was saying, hey, folks, we can't move that fast. Not right now. Not the way that the economy is in flux. We just can't push the markets like that. And of course, that's what Paulson's doing. He's just being very open. Hey, we're stopping the asset purchases. Now we're going to raise 25 basis points, I think we'll probably get to 1.25% by the end of the year, but I don't think it's going to be a fast move here, especially with the tensions we've got going on in the world. All right, gold, surprisingly, it's not pushing higher with the fears of inflation and Bitcoin. This one just is a bit of a surprise as well. I would think that some of the millennials would be pulling into this market as the stock market falls down. This would be a place to be a store of value, and especially for the younger generation. So I'm a little perplexed as to why Bitcoin's not making those moves. VIX, not really surprising to see here because we got a nice move to the upside last few days here in equities. But you can see, folks, we are not out of this negative trend, and we are not above that 50-day simple moving average. Everybody on TV is starting to talk about breaking out of this negative trend, and folks, I'm not seeing it. We're still in a negative trend. If I draw a line here, it is still below that trend channel. So we got the 50-day simple moving average right there. I've got a topping pattern here, just breaking into the value area. Well, we got a volume node here. So that's telling me that folks are very comfortable with equities at the level they're at, especially probably institutional traders or people that have been trading for quite some time, because this price has popped up on their screen several times and they've already traded it. So when folks start trading numbers, they don't want to trade the same thing again, right? I mean, I don't want to buy something for 12 after I've already bought it for 12, 12 months ago, or too many 12s, but 12s 10 days ago or something, right? I don't want to keep buying that number that I keep seeing. I'm going to wait for a better number. All right. Dow Jones Industrial Average is right back to its point of control. So we're talking about this is where value is created, is when folks transact at the same price. If you and I continuously transact right here at 34,208, and all we do is keep writing down 208 on our cards as we're trading back and forth, buy, sell, right? How eager am I to go out there and after I've done that 10 times, get ready to buy these 24,207s now? No, it's just not going to trade, right? We're just going to kind of sit on our hands and wait for better levels, whether I'm the buyer to get out of my trade or if I'm the seller and wanting to buy back in. When we are at points of control, that is why things start to settle down. That's why I talk about this blue area so much, folks, is because that's where, if everybody's transacted, there's no angst, right? We just watch that price. So it'll settle down. The markets have a tendency to settle down at those areas. And again, here we have it with the E-mini S&Ps. Now, you can see the nice rallies. Those were based on the economic data points and some of the talking heads yesterday around the markets. Today, I think this push might be a little bit over, folks. I think heading into this weekend, especially with some of the tensions we're seeing right now with China kind of really showing that they are behind Russia in this advancement into the Ukraine and kind of, throwing the West into the doghouse, really, and throwing that rhetoric, starting to spin that. So starting to make Russia look better than the United States somehow. Well, that's what they're trying to do. And, when you don't have two sides of the coin where you can see the good and the bad or make your own decisions based on the information given to you, well, then you're kind of blindsided by rhetoric, really. And I think that today we will see weakness. So across the board in equities, I'm seeing weakness, or at least risk of weakness to the downside going into the weekend. A lot of geopolitical tensions going on. What's going to happen? Folks don't like to hold equities over the weekend when it looks a little dicey, folks. So risk is definitely to the downside. I've been talking about the sell the rips and covered calls, buy the dips by selling some puts, collect that credit, but buying the dips, meaning that I'd be willing to buy that stock at these levels. Those are great strategies to get involved in these times like this where volatility is really high. Now, something I wanted to talk about with GameStop, it is looking like it's down 10% right now in pre-market trading based on their earnings. And folks somehow are surprised GameStop is losing money. Well, they lost money this quarter despite the fact that everybody's been trying to push. It was an 11-minute earnings call, folks. It just tells me they have no direction. We've talked about this time and time again. As a matter of fact, they even talked about it to the point of the CFO of the company does not own stock in its own company. So when these folks are selling their stock and literally they have no skin in the game now, it would be a stock that I'd be a little bit worried about. They just have no guidance. I don't think any of them really have any idea as to what they're going to do about selling these physical games when everybody is doing digital now, right? I mean, it is all about the metaverse, and GameStop needs to pivot, and they had the money to do anything they want. They could have bought a lot of companies, but they have failed to have any leadership here, folks. So if you are in GameStop, I would consider seriously turn and run. All right. I would not be selling puts in GameStop to be getting that long up here. I mean, I don't think they're worth anything more than $10, to be honest. And then finally, crude oil, I guess there's our crude oil chart popping back up here for us. I think I was gonna look at Apple because I think Apple is set up for a bounce here. As a matter of fact, I think a lot of the tech sector with the bigger pullback in tech, I think that there's a lot of opportunity out there in tech as we've already seen that rotation. So while I called it last year, folks, when we were saying the NASDAQ was too frothy, we were going to see a massive pullback, or at least a more exacerbated pullback in the NASDAQ versus the rest of the equities, because the blue chips didn't get that move and they're going to be a retainer of value. Well, that's happened. Guess what? Now I'm starting to switch gears here, and I'm talking about the tech sector is where you can find some value here going into 2022. Most people are starting to bash on the tech sector. Well, that's the time to be buying, folks, is when they're starting to do that. So last night I did a webinar on the synthetic long. So even for you folks that don't like trading options, maybe have a little bit of pushback there. Hey, I like buying the stock because I like the dollar for dollar risk reward on buying stock. Well, guess what? If you go out there and buy a stock for $100, you got to put up a lot of margin for that. And I show you how to limit that margin exposure when you're using options. So please check that out. And you get the dollar for dollar risk reward aspect of the underlying. You don't get paid a dividend, but hey, if you are saving yourself $10,000 on the trade, well, hey, it might be worth it to not get paid a dividend. So check that out at Pro Trader Strategies. Before you go, hit that like button for me. They aren't limiting you guys, and it feeds a bot to go out there and find somebody like you to share this content with. Don't forget to subscribe, hit the bell, and comment, folks. That's right. That's right. Doki's in the house. So anyway, guys, have a great weekend. And if you can't take that, take it easy.